Ladies and gentlemen, I am your host, MC Rockefeller, and today I welcome you to the Value Investing Podcast. Today I am joined by my co hosts, Edward and Kathy. You may have the floor, guys.
Hey everyone, and welcome to another deep dive. Today, we're going to be taking a look at the investment journey of a friend of mine, MC. He's a Gen Z investor, proving that you don't need to be some Wall Street hotshot to make serious moves in the market.
I'm excited to hear about that.
Yeah, so we're going to be uncovering, how he did it, what strategies did he use, what makes his journey unique, and what are some of the, biggest lessons that he learned along the way.
It's always inspiring to see young people, especially in this day and age, taking control of their financial future.
Right. And MC's story, I think, is especially impressive. In just over 2 years, his portfolio has grown by a whopping 65.85%. And that's even higher after currency conversion. We're talking 70.25%.
Wow, that's significant, especially for such a relatively short time frame. Can you give us some context on how that compares to broader market performance?
Absolutely. So during the same period, the S&P 500, a very common benchmark for U.S. stock performance, gained almost 50%,
Yeah,
which is already a very strong performance in and of itself. But MC blew it out of the water.
right.
And the Philippine Stock Exchange, where MC is from, only saw a gain of like about 1.5%.
That really highlights the skill that he's demonstrated in such a short time. It's clear he's not just, riding the market wave. He's making strategic decisions that are paying off.
He is. But here's the thing. His journey started even before he even put real money into the U.S. market. It all began with a classic aha moment. After reading Rich Dad, Poor Dad.
Okay, yeah.
I know, it's the one everyone mentions. But for MC, it was a game changer. It sparked his passion for finance and made him realize that investing wasn't just for the wealthy. It was his ticket to building real wealth.
Yeah. It's amazing how a single book can, completely shift someone's perspective, right? So many people see investing as this, complex and intimidating world, but MC saw it as an opportunity.
Exactly. And he didn't just stop at inspiration. He dove headfirst into, educating himself. He devoured books like One Up on Wall Street and The Intelligent Investor,
Wow.
which are like, the Bibles of value investing.
Yeah, that's a very strong foundation in value investing principles. So, those books they teach you to look for companies that are, undervalued, but have strong fundamentals and potential for growth. They emphasize, buying businesses, not just stocks, and focusing on the long game.
And that's precisely the approach that MC took. But before jumping into, the real deal, he kind of, tested the waters with eToro's virtual portfolio,
Okay.
experimenting with, different strategies without risking any actual money. It's kind of like, like a test drive before you buy the car.
That's a very smart approach. It's always good to get a feel for the market and try different approaches before, risking your hard-earned money. So what kind of strategies did he experiment with?
Well, at first he got caught up in the excitement of, leverage trading, particularly with commodities like oil, for example.
Right, yeah.
Imagine the thrill of potentially, doubling your money overnight or losing it all just as quickly.
Yeah, that sounds intense. Leverage can, amplify both your gains and your losses, which is why it's considered to be high risk.
Exactly. And MC learned that firsthand. He quickly realized that kind of volatility just wasn't sustainable for him. And that's started to like gravitate towards a more disciplined and long-term approach, inspired by none other than Warren Buffett.
Ah, yes, the Oracle of Omaha.
Yeah.
Buffett's philosophy of value investing is legendary. It focuses on finding high quality companies that are undervalued by the market and holding them for the long haul.
Right. And MC really embraced those principles. He started focusing on companies that had, strong fundamentals, solid growth potential, and crucially, they had to be, undervalued. But he wasn't just like, crunching numbers. He was digging into their business models, analyzing industry trends, and just trying to, understand the bigger picture.
So he was combining the qualitative side, looking at the financial statements, the metrics, with the qualitative side, considering things like management quality and competitive advantages.
He was. And here's where things get even more interesting. So while he was, exploring the US market virtually, he was also actively investing in the Philippine Stock Exchange through COL Financial.
So he was navigating two different markets simultaneously. That's pretty impressive.
Yeah. And what's even more impressive is that he kind of tailored his approach to each market. So in the Philippine market, he took a more passive approach, focusing on well-established companies that paid consistent dividends. He kind of viewed it as a market with its own, unique characteristics and opportunities.
That demonstrates a really nuanced understanding of market dynamics, right? Because recognizing that, what works in one market may not necessarily work in another. It's a key trait of any successful investor.
Absolutely. We could actually do a whole other deep dive into just like the intricacies of the Philippine market.
Yeah, we could.
But for now, let's circle back to MC's U.S. market adventure. So when he finally felt ready to open a real money account on eToro, he jumped in at a rather opportune time.
Oh, what was happening in the market at that time?
Well, the Federal Reserve was raising interest rates, and this was pushing stock prices down across the board.
Right.
Some people saw this as a bad sign, but for a value investor like MC, it was like stumbling upon, a hidden treasure trove.
I see, I see. So rising interest rates, they often make borrowing more expensive for companies. And this can slow down economic growth, impact their earnings. And this, in turn, can lead to lower stock valuations, right? So for someone like MC, it creates a buying opportunity to find those undervalued gems.
Exactly. It was just the perfect environment for his strategy. So to get started, he, diversified with some rock solid bets, putting money into the S&P 500 index fund to capture broad market growth, and of course some Berkshire Hathaway.
Of course, got to follow the master himself.
Yeah, got to follow Buffett.
Smart move. Those provide a solid foundation and exposure to a wide range of assets, which helps to mitigate risk.
Right. But then he started picking individual stocks based on his research and the principles he learned. And this is where things get really interesting.
Okay, I'm ready. Tell me about these stock picks.
All right, so buckle up. Well, remember how MC was so inspired by some of Warren Buffett's investments?
Yeah.
Yeah. So one company that really that caught his eye was TSMC, the Taiwan Semiconductor Manufacturing Company.
Ah, TSMC.
Yeah,
They're the world's largest and arguably most advanced semiconductor foundry.
right.
So basically, they manufacture the chips that power everything from our smartphones and computers to cars, even refrigerators.
Yeah, like they're a crucial part of the global tech supply chain.
Absolutely.
And MC recognized their dominance and their growth potential pretty early on.
Yeah.
So he snagged his shares at around $74 each, and guess what? He ended up selling them later for a whopping $190 a share.
155% profit.
Yeah,
Incredible. Really shows the power of, identifying companies that are riding this wave of long-term technological advancement, right? Because the demand for semiconductors, I mean, it's only going to increase as our world becomes even more digitally driven.
yeah, he was pretty happy about that one, to say the least.
I bet he was.
But it all goes back to his disciplined approach to value investing, right? He wasn't swayed by short-term market fluctuations. He focused on the fundamentals and the long-term potential.
Speaking of long-term thinking, didn't he also invest in Markle, a company often referred to as Baby Berkshire?
You remember?
Yeah, yeah.
Yeah, he did.
Okay.
Markel's a diversified financial holding company with a structure and investment philosophy that mirrors Berkshire Hathaway. They've got a strong focus on insurance, a portfolio of diverse businesses, and a reputation for prudent long-term investing.
So it's like a mini Berkshire with a similar focus on value and a long-term perspective.
Yeah, and their track record, I mean, it speaks for itself. They've consistently outperformed the market over time, right? And MC saw that consistency as a sign of a well-managed company with a sound strategy.
Now, you mentioned that MC also used a stock screener to find undervalued companies. Didn't that lead him to Reliance Steel?
It did. Yeah. Yeah. He was looking for companies that, fit his value criteria, but might be, flying under the radar a little bit.
Yeah.
And Reliance Steel popped up, and it turned out to be another big winner.
Oh, wow.
He snagged a 77% profit on that one.
What is Reliance Steel?
Well, Reliance Steel is a leading distributor of metal products.
Okay.
Yeah, essential, essential, but not exactly a household name.
Right.
But they're the backbone of various industries, from construction and aerospace to energy and manufacturing.
Okay.
Yeah, and MC recognized their vital role in the supply chain, made them, a strong, albeit less glamorous investment opportunity.
It's a great example of how, digging a little bit deeper can uncover some hidden gems.
Yeah. Now, not all of his picks were home runs, of course. Remember we mentioned the eToro ban in the Philippines?
Right, right. Yeah.
That threw a bit of a wrench into his plans.
Right, because it forced him to sell some of his holdings earlier than he wanted to.
Exactly. Yeah, one of those was Occidental Petroleum.
Okay.
But it was actually a promising pick, especially since Warren Buffett had also invested in it, but the timing just wasn't in MC's favor.
It's a good reminder that even with the most thorough research and a solid strategy, sometimes external factors they can impact your returns.
Yeah, he was definitely bummed about that one, especially because he still believed in the company's long-term.
It's tough to have to let go of an investment that you believe in, especially at a loss. But it also highlights the importance of diversification and recognizing that unforeseen circumstances can happen.
Yeah, he learned that lesson the hard way. Another company he had to sell due to the eToro ban was Celanese.
Okay.
It's a chemical company that produces a wide range of products used in everything from paints and coatings to textiles and food packaging.
Yeah, they seem like a pretty solid bet, given their diverse product portfolio and their essential role in various industries.
They did, but again, the eToro ban just forced his hand. It was a case of bad timing more than anything else.
Now, what about Porsche? I remember you mentioned that that one didn't quite go as planned either.
Porsche. That was a bit of a different story. He got caught up in the hype surrounding their IPO, even though the company's financials weren't as strong as he typically preferred.
Yeah. IPOs can be very tempting, especially for well-known brands, but they often come with a lot of hype and speculation.
Exactly. And in this case, MC admitted that he kind of let his excitement get the better of him.
Yeah.
And it was a valuable lesson in sticking to his principles and not getting swayed by the buzz.
Right, right.
He learned the hard way that sometimes it's better to miss out on a potential term gain than to compromise your long-term investment strategy.
And that ties back to his second lesson of, keeping speculation to a minimum.
Right, right. Now you might be surprised to hear that MC also dabbled in Bitcoin.
Really? That seems a bit out of character for a value investor.
I know, right? But he was curious about the potential of cryptocurrencies.
Yeah.
So he bought some Bitcoin when it was trading at around $18,000, and he ended up selling it later for about $88,000.
Wow. A massive gain.
Yeah.
But I imagine that was a pretty wild ride, right? Given Bitcoin's notorious volatility.
Oh, absolutely. He definitely experienced the roller coaster that is crypto trading.
Right.
But even though he made a profit, he acknowledged that the speculative nature of cryptocurrencies and emphasized that it wasn't a core part of his investment strategy.
That's a very wise perspective. While there's certainly potential for big wins in crypto, there's also a significant risk of substantial losses. I mean, it's a different game altogether.
Yeah, he learned that even when venturing outside his usual comfort zone, it's crucial to stay aware of the risks and not get carried away by the hype.
Absolutely. You mentioned that MC had some missed opportunities as well.
He did, yeah. He sometimes hesitated to pull the trigger on companies that later turned out to be big winners. And one of the things that he felt regret about was not investing in Meta, Facebook, and Nvidia when they were undervalued.
Didn't he say he felt those companies were outside his circle of competence?
Exactly.
Yeah.
Yeah, he was hesitant to invest in tech companies because he didn't feel like he understood them well enough.
Yeah.
And as in hindsight, he realized he missed out on some pretty substantial gains.
That can be frustrating, but it also demonstrates his commitment to, staying within his area of expertise. I mean, as Warren Buffett famously said, risk comes from not knowing what you're doing.
Yeah, MC knew that it was better to miss out on a potential winner than to invest in something he didn't fully grasp.
Takes discipline. It's easy to get swept up in the FOMO, the fear of missing out, but sometimes the best decision is to hold back and just focus on what you know best.
Absolutely. Now, as we move into 2023 and 2024, we see MC kind of shifting to a slightly more passive approach in the U.S. market.
Yeah. I recall you mentioning that valuations were rising and the market was becoming less favorable for value investors.
Right. And plus, the looming eToro ban added another layer of complexity. He was essentially forced to kind of play a shorter term game than he had initially, intended.
So how did he adapt to these changing circumstances?
Well, he couldn't just sit on his hands and wait. He had to think strategically about, how to maximize his returns within a limited time frame.
Yeah.
So he started incorporating more technical analysis, looking at price patterns and trends to try and anticipate market movements.
That makes sense. Sometimes you need to combine those, shorter term tactical considerations with your long-term investment philosophy.
Exactly. He wasn't, abandoning his value investing principles. He was adapting them to a dynamic market environment.
Right.
And on top of that, he started paying closer attention to macroeconomic factors. Things like interest rates, inflation, geopolitical events, just to get a better sense of the bigger economic picture.
That's smart. Understanding the broader economic context can provide valuable insights into, market sentiment and potential trends.
Yeah, he even timed his currency conversion strategically. Waiting for the dollar to strengthen against the Philippine peso before withdrawing his funds, and that move actually boosted his overall returns even further.
That's impressive. He's clearly thinking several steps ahead.
So we've covered a lot of ground here, from MC's early inspiration and education to his specific stock picks, both the wins and the losses.
Yeah.
And we've seen how he adapted his strategies to navigate changing market conditions.
It's been a fascinating journey so far.
And what's really cool about MC's story?
What's that?
It's making money. It's about sharing his knowledge and inspiring others.
Oh, wow.
Yeah. He's really passionate about encouraging his friends to start their own investment journeys.
That's fantastic. He's paying it forward and helping others to, take control of their financial futures.
Exactly. He wants people to understand that investing isn't just for Wall Street experts or the wealthy. It's accessible to anyone who's willing to put in the time and the effort to learn.
It's a wonderful message, and it really demystifies the world of investing and makes it feel more approachable for those who might be a little bit hesitant to get started.
Yeah, and he's even got a shout out for Citadel, the premier investment organization at his university, UANP.
Oh, nice.
Yeah, he sees it as a fantastic resource for anyone who wants to learn more, connect with like-minded individuals, and gain valuable experience in a supportive environment.
Yeah, it's great to see him, giving back and encouraging others to follow in his steps.
Totally. But beyond the resources and the communities, MC really believes that the most important thing is to just get started.
Yeah, I agree. Taking that first step is often the hardest, but it's also the most crucial.
And in the final part of our deep dive, we're going to explore the most important takeaways from MC's journey.
Oh, our listeners got something to share. Let's hear it.
Hello everyone. I'm MC Rockefeller, and I'm happy to be in this podcast.
MC, it's great to have you here with us.
Yeah, it's awesome to have you. I'm so glad you're here, man.
It's one thing to talk about your journey, it's another to have you here.
Right? So we're just about to dive into the key lessons you've learned, so please jump in at any time.
I think our listener would love to hear it directly from you.
Absolutely. So as we were saying, let's get to the heart of it.
What are the most important lessons you've learned?
Well, from what we've gathered, your first lesson is something you emphasize a lot.
And that's investing in stocks that are undervalued, have strong financials, and real growth potential.
Of course, I can't really emphasize that well enough. Invest in undervalued stocks, and it's one of the most reliable way to make money in the long term, consistently.
I think that's a great point, MC.
Yeah, it really underscores, the core of your strategy.
It's not about chasing fleeting trends, it's about solid long-term value.
I'm glad you jumped in to, emphasize that,
So you even have a favorite quote from Peter Lynch.
which really sums this up. Stocks aren't lottery tickets.
There's a company behind, oh,
I love that quote by Peter Lynch. Stocks aren't lottery tickets. There's a company behind every stock. So Peter Lynch is one of the greatest fund manager in American history. He manages Magellan Fund, and that fund averages around 28% per year, compounded on average for 13 years. And he wrote the book One Up on Wall Street, which is very an amazing book on investing. And it's one of the first books I read. It's one
oh,
of the first
yeah,
books I
uh-huh.
read about investing. One Up on Wall Street, really amazing book by Peter Lynch.
Oh, you've read One Up on Wall Street too.
Yeah, MC mentioned that earlier.
You're in good company.
It really highlights Lynch's track record.
It also underscores the importance of understanding the business behind the stock.
And that it's not about gambling on, market swings.
Definitely. And MC, what would you say is your second biggest lesson?
From the notes, it seems like his second lesson is crucial.
It's all about keeping speculation to a minimum, right?
Exactly. Speculation, like with cryptos, stocks.
Things like trading, especially with leverage.
He admits you can make money, but you can lose a lot more.
Right. So what is
Well,
your...
yes.
Go on.
Speculation, you can make a lot of money, but you can also lose a lot of money. Here, we're in the game of investing. We're not at the game of gambling. So if you are investing, you want to predict, you want to be consistent with your earnings.
Exactly,
And
MC. Yep,
and
go on.
speculation is not consistent with the earnings. You can win a lot, you can lose a lot. While with investing, you can predict and be consistent with earning a lot of money.
I think that's a great point, MC.
You're really drawing a clear line.
It's about predictable, consistent growth
Not about high risk, high reward gambles.
that separates investing from gambling.
Okay, so what's your third takeaway?
We were just about to get to that.
Well, from my notes, it seems you emphasize something else.
And what would that be?
Time in the market beats timing the market.
Absolutely. It's a classic saying.
But you had a caveat, right?
I think it's important to be flexible.
You need to adapt with the time.
Be ready to adjust your strategy.
Take advantage of those market swings.
Like Benjamin Graham said,
The intelligent investor buys from pessimists.
then sells to optimists.
We kind of touched on this a bit already.
Okay, so what's lesson number 4?
Diligently researching a stock before investing.
Echoing the wisdom of Lynch and Buffett.
Right. Lynch said, know what you own and why.
And Buffett said, risk comes from not knowing.
Those are two sides of the same coin.
Did you find technical analysis useful?
It can be useful and fun.
From
Yeah,
technical
uh-huh.
analysis, it's useful, definitely. It can give you a good buy price or a good exit price. But for me, it's really secondary to fundamental.
Right. It
It's
helps you
really,
find. Oh, back to our listener.
for me,
What's up?
it's really secondary compared to fundamental analysis. But it's also helpful that it can help you determine the price that you can buy optimally. So basically, it optimizes your investment.
That's a great way to put it, MC.
Yeah, optimizing your investments.
So what's lesson number 5?
Well, from what I've gathered, think critically.
Right. And you should discipline your emotions.
It's definitely easier said than done, right?
It's something we always need to work on.
It really,
I think everyone will be better off in investing if people just think critically and really logically without emotions and all of that. Because at the end of the day, investing is really just common sense, and people just want to complicate it further. But if we think about it critically, it's really very simple. Just invest on some, just
Oh,
invest in,
go for it.
just invest in something undervalued with a good long-term prospect and hold it for the long term. That's it. And of course, be flexible and adapt to market circumstances. But yet, it's very simple and it's not really that complicated. And emotions will really kill your investment returns, I'm telling you. And you must keep your emotions in check.
You are all about removing emotion from the equation.
You have mentioned that keeping a level head is a superpower. You got it, MC.
Yes, especially about removing emotion.
Keeping a level head is key.
It really is a superpower in the market.
Oh yeah, let's hear it.
Yeah, I think thinking critically and removing emotions out of the picture, it's really the one advice that I can tell you that really helped me achieve my investment return. It's also failing to adhere to this advice of mine that really made me
Oh,
fail
yeah,
on some investment returns that I'm telling you, especially on more speculative trades. But at the end of the day, it's really what made me succeed, thinking critically.
That's a great point, MC. Thanks for expanding on that.
You know, even if speculative trades do okay, it is still not worth it.
Your main success came from critical thinking.
I think our listeners can really benefit from that.
It really adds to our discussion, so thanks again.
And you know, that also ties into your advice on emotions,
So now that we have touched on key lessons,
and that the key is critical thinking.
yes, and what an insightful chat.
Especially with your help, MC.
Absolutely. And thanks again, MC, for your time.
It's inspiring to see what a Gen Z investor can do.
Yeah, thanks again for joining.
Oh, go for it.
Thank you, everyone. And I really appreciate this podcast that we are doing. I hope that we can encourage more people to invest in themselves and invest in their financial future together. Thank you again, and have a great day.
You're very welcome, MC.
Your insights have been invaluable.
We're so happy you could join us,
Your passion is definitely inspiring.
and I think our listeners will agree.
Thanks, MC, for being on our show. Oh, yeah, uh-huh.
Oh, of course. Also, I want to ask you and the viewers, what do you guys think is my investment return in that period?
That's a great question, MC.
Yeah, let's see if anyone was paying attention.
What do you think our listeners think?
That's a fun way to engage everyone.
You're putting them to the test.
So we'll have to keep an eye out for the answers.
Okay, now that everyone is guessing.
What do you want people to take away?
Okay, I know we're wrapping up here.
So what is your final thought for everyone?
I'll say that it is about. Oh, yeah. Go on.
Oh, sorry. You were saying?
MC.
Please go right ahead.
Well, I was saying that it is about personal growth.
Right, investing in yourself as well as your future.
I really am filled with excitement and joy.
Absolutely the most fun on a podcast.
Right. I'm sure that our listeners gain something today.
Totally.
Okay, to everyone tuning in, I want to thank you all.
Yes, we always welcome you.
And now we have reached the end.
Thank you for joining us on the podcast.
Tune in next time for.
Yep, go on.
Yeah. Thank you once again, everyone, for let this opportunity on letting me in the podcast and sharing my investment journey to everyone. Thank you once again, host and audience. Have a great day, everyone. And before that, I would like to say to everyone to invest in themselves and their financial future. Together, we can make the world a better place together.
That's a beautiful sentiment, MC.
Yeah, that really sums it up nicely.
You want to make a better world for everyone.
To invest together in the future.
I think that gives everyone a better reason to invest. Okay, so let's see what's next.
For more awesome investing stories and tips,
Oh, I'm excited.
there are so many more to tell.
MC, thanks again for your time and wisdom.
And for sharing your investing story. Oh, back to our listener.
Yeah.
What's up?
So thank you again and welcome. And I'm really happy to
Oh, yeah.
share and help you guys and everyone here that are listening in the podcast. Welcome.
Well, thanks for the welcome, MC.
We really appreciate that.
We are happy that you are in the show.
Absolutely. We are just as excited.
What a great way to welcome our listeners.
Absolutely. Thanks for being here.
You wanted to say something else.
What do you think, MC?
What do you think people will take away?
Let us know in the comments, everyone.
You heard the man, everyone.
Do you want to add anything about the future?
Let's talk about personal growth a little bit more.
Yeah, let's elaborate a little bit.
Investing in yourself as well as your future.
What makes you excited to invest?
Let us know what makes you happy.
It will be an exciting journey.
Oh,
And
go for it.
stay tuned for more podcasts. Thank you, everyone, and goodbye.
Well, MC, that sounds like a great outro.
Yes, it was wonderful having you on the show.
I am sure that our listeners gained something today.
We certainly did, and it was a pleasure.
Okay, to everyone tuning in, thanks for listening.
Yes,
And now we have reached the end.
thank you for joining us on the podcast.
Be sure to tune in next time for more stories.
We will be going over more investing stories.
Thanks for listening and happy investing all.
Remember to keep thinking critically, everyone.
MC,
Goodbye, everyone. See you next time.
Goodbye, MC, and thank you for being on the show.
yeah, thank you for your time and wisdom.
And for sharing your investing story with everyone.
That is all for today. Have a great day.
And thanks again for listening, everyone.
We hope that we encouraged you to learn more.